Morning folks, today we're going to talk about mistake number 7, not knowing the comparison rate. So let's think about it. When you see a lot of marketing, and there's heaps of marketing from banks, non-banks and major banks doing advertising for interest rates and showing lower rates. And of course, you would be familiar with seeing a very low rate and going, wow, that's amazing. How much money could I save if that rate was at this figure, if it was lower on your mortgage, on a personal loan, even on credit cards, they can do this as well. So you're looking at the advertised rate. And the advertised rate is always alluring, always seems fantastic, and it's designed to win business from one lender across to another. That's why they make it look so good. But the thing is, most people don't understand that they need to check the comparison rate to find out what the true savings are. Now, a comparison rate factors in all the hidden costs and charges. And what could they be? That could be an application fee. That can be an annual fee. That can be a fee if you're taking a cash advance. There's all these different fees if you break out of a loan earlier. There's all these different costs and fees. And of course, the interest rate, once you add in the charges, might be 6% advertised, but by the time you factor in all your additional costs, could be at 7%. So you need to check and compare the comparison rates of all products before you make a decision. Now, of course, that will vary if the rate is fixed or variable. It'll vary also on the length of the loan as well, and whether it's principal and interest or interest only. So you need to check all those factors. But bottom line is, and especially with mortgages, it can change your ability to release equity. You might go for a cheaper rate and then find out the LVR is only 80%, and or the serviceability, your borrowing power, if you want to use some funds to go and get a loan, is less as well. So you need to look at all the factors of the loan, understand what the true comparison rate is, and really understand what your purpose for the lending is in line with your strategy, with your assets, to basically create the outcomes that you want personally. If you do that, you'll be on track. Ideally, as we've talked about before, you want each your loans separate with separate lenders, and make sure you sometimes want to start with the harder lenders first if you're building a portfolio, so later on you end up with the lenders that are a little bit more flexible because they're trying to take market share away from the major banks. Anyway, check out your comparison rates before you make a decision to change.